Hey everybody, Dean here from the Philly Real Estate Group, and today we have a special guest. We have Isko here from the Mortgage Group. We're going to be going through the real estate market, some market trends, and just going overall on what life is like here as a real estate agent and a mortgage broker. So, Isko, feel free to introduce yourself.
Yeah, so my name is Isko. So I have my own team, SAF Mortgage, but I work under Mortgage Alliance. I've been doing that for a few years. I've actually, driving into to work today, I was thinking about how long I've known you,
Yeah,
and it's about 10 years now. And I
yeah,
remember you were playing basketball at Mavati,
yeah,
and I was like, man, this guy looks like he's from where I'm from. So I'm like,
yeah,
hey, what's your background? You tell me, and we started talking, and we were both in the car business, and
yeah,
it's just crazy right now that we're at the studio 10 years later. So,
yeah.
but yeah, so I'm in the mortgage industry. I do commercial, residential lending, mostly residential for now,
Okay,
and I do all types of credit, financial situations, income types. So,
awesome.
yeah.
Cool. So going into the mortgage thing, so we had a rate announcement what was it, last week, I think, roughly? Yeah, last week. And like, what are your thoughts on that? Like, I think, I think some things are a little bit odd, right? Like, we're in a weird time, I think, globally and Canada-wide, where things are a little bit different. But what do you think about these changes that happened last week? And what are your benefits, or what are your thoughts on the benefits, or if it's not a benefit, what are your thoughts on that?
Yes, I mean, from a mortgage perspective, the interest rate drop on variable is not going to help clients too much that are looking to buy.
Yeah.
Fixed rates are still lower than variable rates, so if we're looking at qualifying and getting to the highest purchase price, you're still going to go with the fixed. But it will ease some pressure off of existing variable rate mortgage holders, which could be a benefit. But with that said, fixed rates have also been going down, so that's helping sort of with an uptick in business that we've seen.
Hmm.
I think we see sort of where the market is headed a little bit for realtors, because people call us to start getting
Yeah.
pre-approved, and then a few months after or a month after they
Yeah.
start reaching out to you guys. So it's starting to come alive, and I think the announcements are partly responsible for that.
Yeah, so I keep hearing a thing about, the next drop is point 0.5, and then even like the US side, they did a point 0.5 drop, what was it, a week ago as well. So do you think that's something, like, again, I'm not gonna hold your feet to the fire, but is that something you think that's possible, or do you think it's like they're gonna really have to watch it because of the inflation rate and stuff like that? Like, I know we're at a record low for inflation now, but I mean, to me, I think it's tricky, right? It's a two-edged sword, because if they go too fast, we saw what happened last time, and if they go too slow, we're seeing what happens now, right? So, yeah, what do you think about that?
Yeah, so I mean, the states dropped 50 basis points, but I think we're always a little more conservative than they are. And if we look at history, we've always been the more conservative. We've had the more conservative financial sector,
Yeah,
banking sector. So I think 25 basis points is probably what we'll see next. But I mean, housing is only one component. Like, it also affects businesses. These large corporations, they have operating lines of credit, and they borrow as well. So the government also wants to lower their borrowing costs, because it could lower the cost of goods to the consumer. Because I mean,
mm,
ultimately, these big companies price everything into their product. So
yeah,
by easing rates on the variable side, they're also helping businesses, which they want to do, but they don't want that sort of crazy market that we had a few years back with the super low rates.
yeah. So, like, one thing I'm noticing finally, like, gas is starting to come down a little bit,
Yeah.
or fuel, whatever. But do you find that groceries are still a little bit higher than what they were before, even with all these little changes? Like, I know it's probably going to take time for groceries to come down much more, but, like, we're seeing housing come down, we're seeing uh, prices of cars come down. Like, I'm finally getting ads again for dealerships having specials, right? Like,
Yeah.
Cadillac has a 0% interest rate, like, on some models and stuff like that. Like, there's some decent deals out there right now. So that's what even, like, I was talking to a lot of my clients. Like, it's just like the sentiment is changing quite a bit. Like, when you go back to school, like, we haven't had a back to school sale for clothes or any stuff in the past, like, 2 years. That's what I felt. And then this year you saw, all these regular stores that kids need, basketball shoes, soccer shoes, sports, like, all this stuff, right? Like, backpacks, all that stuff. It hasn't been on sale, and now it's on sale, and I think that's like a positive sign to come. We're going back to the times we were before COVID. So, yeah. Are you kind of in that? Have you been noticing that, or is that?
Yeah, I think there's less sort of volatility. Like, I mean, they haven't really, like grocery prices, they haven't really come down, I don't think, too much, but they're not going up as much, and they seem to be a little more stable. But I'm seeing like things all around me as well. The cost of things is coming down. Like you said,
Yeah.
more promotions.
Yeah.
Companies are fighting to get your
Yeah.
business again instead of you fighting to get their business. Which
Good.
was
Like
the case.
competition is good, man.
It's
Like I like
healthy.
it. Like
Yeah,
it's healthy for sure. It keeps
yeah,
everybody honest. Like I think, if you're shopping for a car and you have to pay over MSRP, like what are you doing? You know what I mean?
yeah,
Like why is there an MSRP? Manufacturer suggested retail price. It's like it was really a suggestion over the past couple of years,
yeah, for
right?
sure.
So, yeah, things like that. I think that's like competition for sure, very very healthy, and I think that's a great sign. I think we're headed in the right direction. Um, in terms of incentives, is there something that you have that you'd recommend as an incentive for a current, like let's say it's a first-time home buyer? Obviously, we saw the changes for like they can get up to 1.5 million now with less than 20%, right?
Yeah.
Um, how do you feel about that actually, going into that?
I think that one is a lot of theatrics.
Yeah,
Just speaking to the people in the industry, some big brokers out in Toronto, they sort of position that as to help buyers,
yeah,
but it was really to bail out the builders. A lot of these new builders sold these properties for $1.4 million at peak. Not all of them are coming in at value.
yeah.
So when you have an insured loan, there is no appraisal required.
Okay.
So
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 now
now they can
we
close.
see the full story.
Right,
Okay.
right. So
The
that's sort of
insure.
what everyone agrees in the broker community. We're sort of laughing about it, like, because really, in terms of first-time buyers, they're not really looking at $1.4
Yeah.
million
No.
homes, right? So it's just really helping builders get close on these properties. But the other part with the 30-year amortizations, I mean that is a help because it lowers their monthly obligations, and it helps them qualify for about 5 to 8% more in purchase price. So that's a little bit of a help that was welcome.
Yeah, I mean, like realistically, when you're a first-time home buyer, I don't think you're looking at the 30-year amortization is great. It does cost you more interest over the extended 5 years, but are you really worrying about that, or are you just worrying about getting a home for your family,
Right.
right? Like especially if you're like, let's say you're in your mid-20s, early 30s, you just got married, you have a kid on the way. Are you going to be thinking about, oh, I'm going to pay an extra whatever amount in interest, or do I just want a home that's going to be perfect for my family for the next 7 to 15 years, right? I think that's more the worry, and I think that makes more sense, lowering the monthly payment too.
Yeah.
I mean, realistically, when you buy a house, you're paying hundreds of thousands of interest anyways, right? So it's not. I don't know. I'm just kind of blabbing here, but
No, for sure. I mean, but you have prepayment privileges.
yeah,
Like a lot of lenders will let you prepay up to 20% of the initial balance, increase your monthly mortgage payment, so you get an income tax return, put it on there. Like there's ways to really tackle that interest. So I think, yeah, like give yourself the breathing room, go 30 years, keep your payment low, and then if you want to pay off your mortgage, we can create an action plan for you to do that.
So give us like now you got me excited about that. So what would you like? Let's say somebody's they buy their first time home buyer, they get into a home, they get the 30-year amortization. What would be your advice to somebody on that if they wanted to prepay it, or like what is your advice to them to you're in the 30-year amortization now, and what's next? How do you go from there?
I think it's a mindset thing. I was actually at lunch with a lender last week, and we were talking about how prepayment privileges used to be a huge selling feature.
Yeah.
When homes were selling for $200,000, to tell somebody you can prepay 20% a year, people were like, "Wow, that's great." Now with homes selling for much higher, it's not a big selling feature as it was. But I think we need to change that mindset, because you may not be able to put 20% of the original balance, but even if you put $1,000 towards it, any extra money, it goes a long way because of the way that the mortgage compounds. So any money that you throw on there, it's going to go on the principal directly, and it's going to really affect your amortization. Like it'll reduce it for sure.
So like even like let's say you had whatever, let's say you're commission based, 1 month you're like let's say you're working in the car industry,
Yeah.
or whatever, right? Any sort of retail sales environment where you do get bonuses every month or every quarter, even if if somebody's putting a couple $100 every couple months, is that something that would make sense for them to do, or what are your thoughts?
For sure, it's a big impact. I mean, assuming they have no other debts, and assuming that money they can't put in investments for higher returns, it's worth putting it into your mortgage.
Okay.
For sure, financially, and just the mental component, right? Like everyone wants to be mortgage free, so knowing that you're getting there sooner and sooner is great.
Now now this was something I've always wanted to know. Like let's say you do your first 5 years, right, on your mortgage, You're coming up for a renewal. Is there a game plan for renewal? Like, should you be thinking ahead of time for your renewal, or do you just wait until it expires and the bank calls you or the lender calls you, whatever? What are your thoughts?
I think you should really be proactive. I think even reaching out a year before, because you have to understand what sort of situation you're going into. Maybe your job has changed since you originally got your mortgage. Maybe circumstances have changed, financial situations has changed. So you want to really give yourself time to position yourself in the best possible way so that when renewal comes, you can make that transition if you have to. Your existing lender sort of banks on the fact that it's easy to renew, right? You get a letter, you sign it, it's done.
Yeah.
You know, so they know that. So does that mean you're going to get the best rate at renewal? Usually not, right? So it's good to explore your options at renewal. And
So basically, they're kind of, in a way, they're kind of holding you hostage, right? Like, let's say, you bought a house, you're making a certain amount, and now it dropped by 20%, right? Like,
Yeah.
would you even qualify for that same lender with your new job if you didn't sign that existing letter, right? Like,
well, that's just the thing, right? They know you don't have to requalify. If you've made your payments, they'll offer you a renewal. So they're just thinking, well, people are just going to sign on the first thing we send them. But it's not always the case. There are other things that you can do. Like, even if your income has dropped, instead of just transferring, you could even look at refinancing. Maybe you want to pay off some debts. Maybe you want to take out some equity. It's the perfect time to do that because there's no penalties if you do it on your maturity date.
interesting. And are you seeing a lot of people just take the renewal letter, or are you seeing a lot more people kind of looking around and seeing what's available? What's your yeah.
Yeah, I mean, you do see people always call or sometimes call, but sometimes they just think, oh, I'm with this lender for life.
Yeah.
You know, they approve me, so I'm just gonna, you know, they've been good to me, so I'm just gonna stay. But I mean, financially, it's not the best case because even if you're saving, you know, 30 basis points on a couple $100,000, it's a big
Huge.
deal,
Yeah, it's
right?
huge,
So you should
huge.
always explore your options at renewal. Yeah,
Or before renewal, like you said, right? Like,
Yeah.
even if you're a year to 6 months out, at least you have an idea of what's coming instead of you know, last minute. You're like, okay, I guess I'm signing this thing.
Yeah, the 2 week before closing.
Yeah.
Hey, my renewal's coming up in 2 weeks. What can you do for me? I'm like,
Oh
oh, why didn't you call
God.
3 months ago?
Yeah.
But
What are your thoughts on newcomers to Canada? Is there any incentives for them to be buying and stuff like that? Like, you know, obviously PRs and stuff like that. They have changed some of the rules of newcomers to Canada buying and selling and stuff like that. But is there anything that benefits newcomers looking to have a fresh start in Canada?
yeah, so actually, this is a good question. They made it easier for them to qualify now. So in the past, newcomers were able to buy homes, but their thin credit profile always made it a problem because the lender can't assess your credit worthiness, so they just don't know what to use. So the insurers and the lenders sort of made a program together where they'll look at things like, what's your repayment history on your current rent? How have you paid your utility bills over the last 12 months? An international credit bureau. So they'll use that to sort of determine how worthy you are as a borrower in terms of your credit, and you can buy houses with as little as 5% down.
Interesting. So so let's say they're renting off of a landlord. They found somebody on Facebook or Kijiji or whatever. They rented from them. How would they look at the repayment history from that? Like, it's obviously not a property management company. It's not a rental building. Would they just be contacting that direct landlord? Is that as simple as that, or?
Yeah, so it's going to depend a little bit on the lender. So I did one of these a few months ago with a lady out in Oakville, actually, and she provided 12 months bank statements showing that her rent was coming out on time each month. The landlord gave a reference letter, and I think they asked for a cell phone bill from Rogers for 12 months.
Perfect.
She had a $2,000 credit card. She had a great job in the bank. She was a professional back home, came here, and she was able to get an insured mortgage, which was great for her and her family.
And how long was she in Canada for?
She was in Canada just 12 months. Like she did it. She rented out for a year, and on her year anniversary of her rental property, she wanted to move into a house, and so. Yeah, we
That's
made
an amazing
it work.
story, honestly.
Yeah.
Like, that's like hard work and just exploring options. That's awesome. That's kind of what that's what I like to hear, honestly. Now, so we've covered incentives for first-time home buyers, newcomers. What about like a first-time investor? What would you say for somebody that's, you know, either looking for a rental property or looking for a multi-unit property? What are your thoughts on somebody that's looking for that?
Yeah, so first-time investors, there's a lot of ways that you can become an investor. I mean, if you're looking at owner-occupied plus rental, you can get into, let's say you get a triplex,
Yeah.
and you plan on living in one of the units, renting out the two. You can buy that with as little as 5% down. You don't need 20% down as long as you're going to live in one of the properties or one of the units. So you can become an investor with 5%. So you're having somebody subsidize your mortgage costs, and along with all the other benefits. So that's definitely one of the things that you can do. As far as purely from an investment standpoint, market rents are all-time highs.
Yeah.
I mean, borrowing's expensive, it's coming down, but rental income is high.
Yeah.
And there are MLI programs. So the CMHC's new program targeted at multi-unit properties. So it's not necessarily an incentive, but they are low insured rates for multi-unit properties. This is assuming you sort of qualify, the property qualifies in terms of accessibility,
Yeah.
affordability, and the environment.
What do you mean by accessibility?
Like for people like wheelchair access and
Okay.
for the impaired, that sort of thing.
Okay. Now, does that so let's say you're a first-time investor, you're buying that, let's say you're buying a triplex or a fourplex, right?
Yeah.
You're gonna live in one of the units. Those properties aren't cheap. Does
Right.
that new 1.5 million does that combine together to be able to live into something, buy something pretty nice for 1.5? It's got a couple units, you get a couple doors at a couple $100,000 a pop. Do those two qualify together? Is that kind of what you're saying, or?
Yeah, well, I mean, you can do that. So you can go with the $1.5 million triplex, owner occupied, and you rent out the others. It's important to know which lender that you're dealing with because they all look at rental income differently. So, of course, it's difficult for somebody to qualify for a mortgage of that size. But what some lenders will do, or all lenders will do, they will look at the rental income that's coming from those two units. So let's say two other units that are being rented, and so let's say the rent is $3,000 from each. I mean, that's $72,000 in a year that you can add to your personal income to help you qualify. But that's assuming the lender will accept 100% of that income. If you go to your bank, they're going to accept 50% of it.
Okay.
If you go to somebody like me, a mortgage broker, we have lenders that will accept 100% of that rental income, which is the difference between deal and no deal, really.
Yeah, it's the difference between you owning a multi-unit or not owning a multi-unit.
Yeah, exactly.
Right? That's a huge difference. Yeah, that's awesome to hear. So basically, you're saying the bank's not going to help you with that, but there are solutions out there.
Yeah, for sure. That's because you want to maximize that rental income. I mean, it really doesn't make sense why they're only factoring in half of the rental income if what you're getting is the full amount. But I mean, lenders with excellent rates, excellent programs are offering, to qualify, your income using 100% of that rental income.
So you don't have to go on the B side or the private side. This is like a full A lender and stuff like that.
Yeah, you're getting excellent rates.
Yeah. So there is tons of options out there. That's good. So really, like if you're a young person looking to invest in something, that could be an option. I mean, that's hoping that you actually want to be a landlord and all that stuff, and that's a whole nother can of worms that comes with. So, yeah. Now, in terms of where do you see the market and what do you expect to happen over the next 6 months? Obviously we can't predict everything, but what are your general thoughts? I mean, I have some thoughts, but I'll let you kind of take it away and go from here.
Yeah, so I think we're going to see less inventory in the next 6 months, and I also think that we're going, or at least the pace in which their listings are coming up, slow down, because a lot of people were selling due to interest rate pressures at renewal. As interest rates start to ease, there's less pressure on them to sell at renewal, and so they're not going to sell their home, right? So, like I had clients who simply could not afford their renewal and said, I got a list. Like, they went from 1.79% to mid fives, and that's a big jump for somebody. As rates come down, you're going to see less of that happening, and so I think there's going to be less inventory. Now that's going to have another effect. I mean, that you could probably talk about that effect when there's less inventory, but
we're heading into the slowest month of the year.
Yeah.
Like we're about to we were seeing 1,000 listings. 1,000 listings per week for the first couple weeks of September, and now we're already down to 800. And that, like, by October, we're probably going to be in the sevens. End of October, probably close to 500, 600, and then November we're going to be probably in the fives and fours, and then December is going to be 100 listings a week, which is going to be nothing, right?
Yeah.
I'm talking about the whole Ottawa board, so that's from like Brockville through Cornwall, through everything in between there. Hawkesbury to Ottawa to Arnprior. So that's 100 listings throughout everything, and that includes rentals and purchases. So
Yeah.
inventory is going to come down quite a bit, and I don't think people are ready for that. I think a lot of people are hoping that, rates come down so that they have a favorable rate, and then they're going to hope that, none of these properties sell. But realistically, there's going to be some people moving on them, and I think as we approach winter, it's going to slow down just like every other year,
Yeah.
right? Like every winter, listings go away, and then slowly in spring they start coming back. But I think we're going to see a lot of listings come off the market, and some of them try and come back for next spring. But we're also going to see some of them sell, and then we'll see what happens starting the new year, right? January 2025. So, and that's fast approaching. What do you think over the next 6 months? Like, do you think we're going to see tons of rate cuts? Like, I'm a little bit scared as to what's going to happen. Not scared, but like I'm a little apprehensive, right? Like we just went through a couple of years of like up and down, right? Like we saw, what was it, 2023 spring, so it was like March. We had a really active market. People were buying and selling, and then we had a rate increase, and it shut everything off, right? Or sorry, I just said the opposite. So we had an okay market. The rates dropped a little bit. Everything kind of went up, right, in the middle of March 2023, and then they raised their interest rate up by a little bit, and then it cut off for the rest of the year. Now this time they dropped it. We're back to that same rate that we were in 2023, but we're not seeing the same activity. I mean, we're seeing different activity, right? Like it's not an instant change, right? So obviously you're telling me that you're getting tons of applications and people are coming in and stuff like that. But what are your thoughts over the next 6 months? Like if they do drop it, like let's say we do start seeing a rate of 3.99. Like I find that hard to believe, but some people are saying that, so I'm not sure. But like what happens if we get to that point?
Yeah, I mean, it just means that people can afford more home. So when people can afford more home, they typically go to the max, right? There's out of 10 pre-approvals that I send out, only 2 of them will say, we're not going to go to the max.
Yeah.
So people will, and that could drive prices higher. Like I already have rates right now in the low 4s. So 3s are, I think, inevitable right now. On 5-year rates. That's for insured purchases and that. But yeah, I mean, it's tough to say. Like they're coming down, but the market hasn't caught up yet, and people are still thinking like we're going to go back. Like we're never going to go to 1.59 for 5 years. I mean, that's just not going to happen. But somewhere in the mid to high 3s would be a healthy economy, and that's sort of where we were before. So I'm hoping that we get back there. I mean,
what was the lowest rate you saw during the pandemic?
So there was HSBC at one point had 0.99%, but that's if you brought your investments over to them. The ones that were sort of more common but really low was like 1.49 for 5 years.
Is HSBC a pretty big lender in Canada, or?
Yeah, so they got bought out by RBC, their mortgage business.
Okay.
They're a huge international bank. They would have good pricing, but the client experience was terrible. Like people would go in, and then for 3 weeks they wouldn't get a response. They would have absolutely zero contact with the person helping them. And you're closing the biggest transaction of your life, financial transaction of your life. So you need somebody that's accessible, and they just were never accessible. So we would, even though they had a slightly better rate, assuming you had a lot of money to bring to them, they would still not, people would still come to brokers to put them into something simpler. I don't want to bring all my stuff over to you. I want somebody to answer. I'll go with a great lender for 1.49, and that's it.
Yeah, I mean, you can get a good rate on your mortgage, but what if you're losing a ton of upside on your investments, right? Like who knows what they're doing at HSBC, right?
Well, that's exactly what they were doing. Like it was really, they would, because I mean they weren't making money at 0.99. It was really to drive their investment. So it's kind of like the hot dog at Costco. Like I don't think Costco's doing too well with that, but I mean sure, maybe some people go in for it and spend $500 at Costco because of it. I mean it's a loss leader, sort of like what they were doing with the rate, but. So HSBC's mortgage was the Costco of mortgages.
The
hot dog
the
mortgages.
$1.50 hot dog. I mean, that's the best deal in the world. You get a drink and a hot dog. It doesn't get better than that. I mean,
inflation proof.
Yeah, it's crazy, and that's the wild one.
Yeah.
So, in terms of, let me just get to my stuff here. So we looked at the market. Do you think it's a good time to invest now, or do you think it's, okay to wait a little bit, or what's your thoughts on investing, like, whether it's a rental unit, like just a standard townhome that you want to rent to somebody, or a single home, or multi-unit? What are your thoughts on that? And what do you think is the best investment for somebody looking to start their investment portfolio? Sorry.
Yeah, it's always a good time to invest. Honestly, I mean, there's always good deals to be had in the market. Like, there's always something that you can find. I mean, you got to look. You got to work with a great realtor who understands the market, understands comparables, how to negotiate. But there are always good deals to be had. I think if you're doing a more of a long-term approach, that's a safer bet. I still wouldn't advise people to be speculators.
Yeah.
That's where things become problematic, because you think that I'm going to buy this and sell in 6 months for 100K more. I mean, that's just not the reality anymore.
Yeah.
It was a few years ago. It's just not anymore. So if you have an action plan and a strategy, and you're again working with good professionals, I think it's a good time to invest for sure.
Yeah, and then like I mean the fact that there is options out there, especially if you have lenders that are gonna factor in 100% of your rental income. I mean, right? Like if somebody's like just like you said, 72,000 of business income on top of the let's say you even have a $75,000 salary. At that point, you're getting dual income.
Yeah.
Right? Like
Yeah.
you're basically like you're high up there. So it makes a big difference, I think, for sure.
And dual qualification. Like now you can.
Yeah.
You know what I mean? Like you're.
Yeah, I
going
think
on,
I think a lot of it, like a lot of the clients I spoke to over the past year, it was just we'd love to spend 550, 600, but we're maxed at 500.
Yeah.
Right, and I can't even imagine like what it was like for people in Toronto. Like, I think what's the average price in Toronto? Probably 850, 900.
Yeah.
Where our average price in Ottawa is 650, roughly, like 600 to 650 in that range, right? So really depends. It's a huge difference for sure. Now, in terms of what are some troubles that consumers are currently facing when purchasing homes, whether it's first-time home buyers, upsizers, or investors?
Yeah, so I think for first-time buyers, I mean, the biggest problem right now that I'm seeing is debt. Canadians are carrying record levels of consumer debt right now, just because of the pressures of the cost of living. So, car payments, that $1,000 SUV is really hurting their ability to borrow. So it's really just the debt. Like a lot of people are struggling with that. So that's something that's a challenge for first-time buyers. Also, the rates, less now than a few months ago, but still, because there's a stress test rate of 5.25, which is what we'd qualify you with usually. But because the rates are higher, we qualify at contract rate plus 2%. So all that means for buyers is that it's a little bit more difficult to enter the market than it was in the past because of the rates. But with that said, prices are lower. There's more inventory. You can be a buyer again, where you can have, maybe do a little bit of negotiation. Don't get too out of hand with it, but you can do a little bit.
You can do something, right? Like you can at least pick. You can get your inspections in there. Like I mean, like to buy a house sight unseen, no financing, no inspection. Like, come on, like that's just not realistic, right?
No. Like if somebody was going to ask me, would I want to be a first-time buyer at these rates right now, or would I want to be a first-time buyer when rates were at 1.59, but the housing market was crazy?
You can buy a house.
I would say all day right now.
Yeah.
I'm going to renegotiate that mortgage in three to 5 years. I'll never renegotiate that purchase price.
Yeah.
So I'll take the
point.
purchase price. So.
Yeah, I mean, a lot of people are forgetting that. Like, I talk to a lot of agents. Like, there's some agents that are out there and they're struggling. Like, oh, I wish it was like it was in 2022, where you could just put a sign down and the house is sold in a week. I'm like, yeah, but what were you doing to help those clients buy, right? Like, you couldn't buy a house. You're competing with 20, 30 people.
Yeah.
Right. Like we had, and it wasn't just people in Ottawa. You're competing with out-of-town buyers. Like the out-of-town buyer doesn't really exist right now.
No.
Right? There's not much of those. It's
No.
mainly people that are, well established in the city, and that's kind of how it's happening. Are you finding any troubles, like people that own homes and they're looking, like, so let's say somebody, like a young family, is going from a townhome and looking to upsize to like a single home with a bigger lot and stuff like that. Are you finding them having any issues, or are you seeing is that kind of like a client that's having an easier road than a first-time home buyer, or what's your thoughts on upsizers?
I think as long as they have realistic expectations about what their home is going to sell for, it's pretty smooth. But a lot of people are caught up in, what did my neighbor's home sell for a year and a half ago? I want the same amount. But they forget that they're now buying a property in a market where property they're buying is less now than it was, when their house was at peak. So you have to look at the big picture. You can't expect to get record amounts for your home and then pay a less amount for the new home. So as long as they're realistic and they say, they speak to the realtor, or what are comparables, like what do we need to be to really sell this home, they can usually sell that home if they're being reasonable and the home shows well.
Yeah.
And then, so it can be as smooth for them as it is for anybody. They just have to have the right expectations with their home.
But in terms of like, are you seeing those people trying to break the bank and get their kind of quote unquote dream home? Like if they're upsizing from a first time home, or are they kind of being conservative in terms of their search? Like a single, like if somebody's buying like let's say they're selling their $650,000 townhome or $600,000 townhome, and they want to get into a 900 or $1 million single. Are you seeing that pretty often? Is that the kind of jump, or are you seeing it a little bit more conservative than that, or how's that look?
I think it really depends on the client. Some people always, they want that single family home. That's part of the dream, I suppose.
Yeah.
But so there are a lot of people making that push. But I'm also seeing people looking to downsize, like saying I have 5 rooms. I only sleep in one.
Yeah.
I only have one kid. Like, what's the point of all this? It's just
more to clean, more to maintain. Yeah, no, it's
so it kind of goes both ways, really.
I don't know how you feel, but mowing the lawn is not the funnest thing. That's my least favorite chore, but yeah.
No, for sure. There's definitely benefits of condo life. I mean, I live in a house, but I used to live in a condo, and I'm like, we talked about it. I'm like, I just miss somebody doing everything at the condo for you. Just live and
you go upstairs. You go to the gym in the condo, or you go to the. That's one thing I think Ottawa is very. Ottawa doesn't have a huge condo market. Is kind of like what my feeling is. Like I feel like people in Ottawa do prefer to be in a more kind of suburban area, as opposed to living in a downtown condo life. Also, we're also very different condo life than it is condo life in Toronto and cities like that. So it's interesting. I mean, there are some pretty decent condos out there, but we'll see where that goes. I think Ottawa's a little bit behind, but I think let's go into this part. I mean, what are your thoughts on the Senators now being approved to move to LeBreton Flats? What do you think that's going to do?
First, it was way too late. Like, I mean, I grew up in the Toronto area. I've done some traveling, and these places are downtown, right? Yeah. You have natural spill off to the restaurants before and after. It's easy for everyone in the city to get to. So, I mean, it was much needed. I think that's going to really help that area, and it's going to make downtown Ottawa even more appealing. I mean, we're doing a lot of work when it comes to, or the city's investing a lot into making downtown Ottawa a more desirable place. I think that's just going to add to that.
Yeah, and I think the city kind of underestimates what we're capable of in Ottawa, right? I think as a capital city, to have a major sports franchise not be in the downtown core, like yes, you're in a tech sector in Canada. Yes, sure, there's some great stuff there, but I mean, to have an NHL team not be in a downtown core, to be flourishing that downtown business is wild, honestly.
Yeah.
And I'm kind of excited to see it. I know a lot of people have been complaining, you go look up the post on TSN, and the first 100 comments are, can't wait for the traffic, can't wait for the traffic. It's all about the traffic, right? But I think these are all growing pains, right? We went from 900,000 to 1 million, and I think we got way more than 1 million in the city.
Yeah.
I think, when you factor in the people coming in from work from Gatineau side, you factor in that we're a capital city, so we have enough people coming to visit the parliament and stuff like that, especially during peak seasons, right? Like during the summer, you have a lot of people just coming to visit. Downtown's pretty busy and with nice weather too. So I'm excited for that. I don't know how long it's going to take to build it. I don't know what it's going to look like. I hope it looks like that rendering that they put on there, because that looks pretty sweet. But we'll see, right? Like it's I think it's a good move overall though.
Yeah, and I think with public transportation, with improvements, and
you're gonna get some flack here if you mention the LRT,
So it has lots of room to improve. Yeah. But I think once it is there, I think the traffic is gonna be less of an issue. Like, I mean, I live near High Park in Toronto, so that's downtown west. And if there was a Raptors game, I would take the TTC. Yeah. I'd hop on the subway. I'd catch a Raptors game. I'm not gonna drive there, spend $50 on parking, stuck in traffic for 4 hours, when I can just take one line and get to the stadium. So I think once we develop that sort of infrastructure, I think it's going to be amazing.
Yeah, it'll be interesting to see. Like, I mean, like that part of like where they're LeBreton Flats, that area, it's pretty dense, right? Like you got all of the downtown side. Elgin is close by. Then you also have Westboro and Hintonburg really, really close there, and you have everything just slightly south of that too, especially in the Glebe. So those are some pretty dense areas. I think we'll see. I think we'll start seeing some really good turnouts for some games, and I think that'll fuel a lot more business going around as well. So. In terms of, okay, so we talked about that. So troubles that consumers are facing. Your advice for a first-time home buyer buying in the next 12 months. So if you're bring yourself back to young Isko, what would you be doing as a first-time home buyer, and you're looking in the next 12 months?
So young Isko, I'm maybe showing my age right now. I was gonna say I would tell them to stop ordering Uber Eats.
Yeah.
But no, I've become like that. It's like what the memes say: stop ordering Uber Eats. No, the reality is, for first-time buyers, you have to want it. You have to really want it. Like I've seen clients who, a couple, boyfriend, girlfriend, fiancés, whatever the case, and they made it a goal to buy a house. So they picked up second income. One started actually driving, Uber. Other took on a second sort of on-call job. I've seen people sell their cars to eliminate that payment and put that money into a savings account. So if you want it, it is achievable. But if you're expecting to sort of, pay expensive groceries, do all, go on these big vacations, on credit, or order and use Uber constantly. It's going to be hard. It's going to take you longer. But if you really hunker down and you want it and you create a plan, and like you got to reach out to professionals. Yeah. Like everybody's under the impression I got to get my credit A1 before I talk to a mortgage broker. No. Talk to me a year, 2 years, 3 years before you want to buy. Let's create a strategy. Let's look at where are you now, where do you need to be, what you need to do. Some small adjustments like the type of income you're earning or where you're putting your money, they can make a world of difference. So I think have the conversations with realtors, mortgage professionals, financial planners. There's a lot of resources available to first-time buyers that they're not really accessing all the time.
Yeah, I mean, I think we touched on a bunch of stuff here. I mean, like if you're I still keep going back to the multi-unit thing. Like, if you find a lender that's giving you 100% of the rental income and you're only making 50, 60, 70 grand, like now you got options.
Yeah.
Right? Like, it takes being a landlord a little bit too, but I mean, you also own a place.
Yeah. Yeah.
Right?
Yeah,
like it's the difference between owning and spending 2-3 grand a month on rent, right? So, and I think a lot of it too is I think a lot of people are getting into that, that Instagram lifestyle, that influencer lifestyle where, you always want to be going on these extravagant vacations and this and that, and you're at a young age. Yeah, it's great for sure. I mean, there's also nothing wrong with going on all inclusive.
Yeah,
right.
Absolutely.
There's nothing wrong with that. Like, I firmly believe in taking a break from regular day-to-day life and enjoying yourself and relaxing. But I mean, there's some people that are taking 2-3 month vacations and coming back and pockets are empty, and now it's time to get back to it. So I mean, I don't know. I think you hit the nail on the head with you have to want it, and if you want it, make a plan. And usually when you write something down on paper or put it on paper, it's gonna come true. So I think that's a big one for sure.
For sure, and I think about back to that Instagram lifestyle. I have a wide variety of clients. I have, from first-time buyers to multi-million-dollar investors to executives at major companies internationally from the Gulf. So I've seen a lot of different sort of income and situations. I promise you, the people with, the strongest finances, they're not part of that. they're not doing they're not trying to catch up on Instagram. They're really living comfortably. They're not showing much. They're just doing what's comfortable for them. And not to say that you shouldn't post on Instagram and do all these lavish things. Like some people like to do that, but I think if it's for the purpose of demonstrating some sort of financial ability,
or just trying to keep up, right? Like that's just
it's a game you're not going to win.
Yeah, there's that quote about comparison. Comparison is the thief of joy. I think is something like that goes. Right. But like, it's true. Like just live your own life, and not to get all philosophical here. Like we're, but yeah, no. Like I like just enjoy what makes you happy, and if it's traveling 6 months out of the year and not owning a house, then that's your happiness. Who cares, right? Yeah. But if it's the opposite, and if you want to own a place and you want to start a family, then maybe look at the other way, right?
Yeah, this is all from a perspective of home ownership, right? Like if you want to be, on TikTok and do your dances and go for it. But like, we're talking about home ownership and, to get there, you got to kind of refrain from all that.
And so this is one thing I always struggle to understand. So there are, let's say, okay, let's talk about TikTok and Instagram and all these influence. Like, let's say they're getting income from TikTok and ad revenue from this or that or YouTube, whatever. How does that, is that real income? Is that like a like corporate income, or how does that qualify in the mortgage world?
Yeah, so it's real income. I mean, there's even other platforms that people are using, and that's that's considered income too. Like, but it really depends on how you file your taxes,
Okay.
right? So in this country, you're going to pay somewhere, whether you want to pay taxes or you want to pay an interest rate. You can't you have to choose. Do I want to pay the bank or the government? So if you decide that you want to pay the government and you file your taxes properly, then you can with 2-year average, you can get A rates with that income. So you'll get the best rates in the market. If you decide that, I've got a lot of expenses and, I'd rather pay the bank, higher rate, then with 20% down, you can, give 12 months of business bank statements. We would annualize that income and we would use that income instead of using what's declared on your CRA declaration, and you can buy a home. So you can definitely qualify with this type of income. It's just really a matter of how much am I going to put down and what are my interest rates going to be.
Yeah. Okay. Interesting. And so, how do you feel about real estate in Ottawa, in Ontario, and in Canada, all separately?
All separately.
So like we'll go through
Yeah.
like how do you feel about real estate in Ottawa? Like you said you're from the GTA,
Yeah.
and you moved here. When did you move? What was it? 2015, 2014?
No, so I actually moved in 2011.
Okay.
No, sorry, not 2009.
Oh wow. Okay.
2009.
So
So
it's
way
been a
back.
while.
So I grew up in Hamilton,
Yeah.
and then came to Ottawa when I was 18, 19.
Mhm.
So it's been a while. I spent some time in Toronto in 2018, 2
Yeah.
years there, and then came back here. But so I've seen the markets, and I actually do a lot of deals in the GTA. About 30% of my business is in the GTA, just because
Nice.
I'm from there. So,
Yeah.
but as far as Ottawa, it's a great city. Like I'm here for a reason. I love it. So from a property perspective, like you have the federal government, which is the largest employer here. Employs a lot of people both directly and indirectly. You have the tech sector. We're a university town, so we're going to keep getting population that's high skilled labor. So that's going to fuel sort of the real estate market. Plus, what are all the other things that the city has to offer? Like we have some great amenities, we have access to nature, we have a good quality of life. It's relatively safe. The proximity to Montreal, proximity to the States. So
Yeah.
Ottawa has a lot going for it. So, and if history sort of repeats itself, it's a pretty stable real estate market.
Yeah.
Canada, it's tough to speak as a whole, but I know Toronto offers some of the same things as Ottawa does, other than affordability, right? That's the thing. But anywhere where there's jobs and there's reasons for people to live, usually it's a healthy market.
Yeah, you touched on the safety thing. Like, what do you think the difference is? Like, I would have to look up the crime numbers or whatever. But like, do you feel Ottawa is much safer than Toronto overall as a whole, or like I think that's one of those things a lot of people don't factor in. Like, with a big city comes a lot of different things too, right? So that's something I know. I know some people are talking about the homeless population we have here, and that's tough too. That's tough to figure out. I mean, it's tough to figure out in any city, but I mean, if it's getting bad here, it's probably even worse in Toronto.
Yeah, for sure. I mean, I grew up in East Hamilton, so when I came to Ottawa, the Hammer, Steel Town,
Yeah.
the gritty city of Canada. But so and especially in the East End. And so when I first saw Ottawa, it was actually on a trip in grade 8. So everyone goes to Ottawa for their trip.
Yeah, for the Parliament, right?
Yeah, and I thought, I can't believe this.
Yeah.
Everything's manicured. Like Colonel By is all landscaped.
Yeah,
It's so beautiful. It's so clean. It's so safe. Like in Hamilton, East Hamilton, and even Hamilton's come a long way. I don't want to hate on Hamilton, but it's an industrial, blue collar, very very gritty city, and like lots of tough neighborhoods there. So when I saw Ottawa, I couldn't believe how safe it was, and I'm like, you know what? One day I'm going to apply to school there and move to Ottawa, and then that's what ended up happening. So I feel like Ottawa is way more safe. I mean, yes, we have issues with the homeless population. I mean, that because of a lot of reasons. I mean, for me, I think a lot of it has to do with government policy, but that's a whole another conversation. But I mean, look, if you're buying downtown and you're buying in Centertown, that's sort of part of the neighborhood
you're in the
characteristics,
inner
right?
city,
You just
right?
have to accept that that's, that's what you're gonna get. So
Yeah, like if you want to live in the suburbs and live the suburban life and be secluded, then that's also available too, right? So
yeah, exactly.
no, that's awesome. In terms of so thoughts on Canadians moving to the USA. Are you hearing that a lot? Are you getting a lot of, because I know it was a huge thing during COVID, right? Like everybody was fed up with the lockdowns. They wanted to just get out of here. We already have a ton of snowbirds that go from, Canada to Florida all the time. But are you getting a lot of people that are moving to the US now, or are you getting a lot of people that are coming back, or is it kind of a mixed bag of everything?
Yeah, so during the lockdown years, I think it was more common. Everybody was looking to sort of go to Florida, go to Texas, go to places that had a different sort of lifestyle than we had. In 2021, I actually spent quite a bit of time in 2022 in Florida, taking advantage of the weather and all things that came along with that. But I do hear people talking about it, especially business owners, because there's actually a path for you to go there called the E2 visa. So essentially, you're going to demonstrate that you're going to employ at least 1 or 2 Americans while you're down there. You're going to open up an office, and they'll get you a visa to do that. And I know people that have done that. Now, you don't have necessarily a path to citizenship, but as long as you're operating that business, you can stay there. And eventually, you can work your way to get a green card. Now, as far as living down there, I mean, look, like their currency is much stronger than ours. Their unemployment rate is lower than ours. Their property prices are cheaper than ours. Some states like Texas and Florida have no state income tax. So when you just factor that in, that's a huge amount of income that you're saving. They have a more favorable business climate. They have grants for businesses. So, there's a lot, America has a lot going for it depending on the state. So I think there's definitely a case to be made for living in the States. Now, some of the Canadians watching this, don't misunderstand. Like, of course, it's great to live in Canada. We have OHIP. We have, there's benefits.
There's difference of everything, right?
But yeah, there's definitely a case to be made in the States. If you look at Messina, New York, Waterdown, you can buy a house for $150,000. Yeah. Right, like 100.
Ogdensburg, buddy, $50,000 a pop.
Right. Commute to Ottawa.
Yeah. I actually there is somebody that I knew. They bought 2 rental properties in just off of Ogdensburg. I think it was like 40 or 50 grand each, and they just rent them out and whatever. Like it's a, what is it, like a hour and a half drive to Ogdensburg or something like that? Not even, maybe an hour.
There you go.
No, it's interesting. I mean, if you got 50 grand, whatever, right? Get in there, and that's that.
I remember when I was in Tampa. So Tampa, St. Pete area. So big area in terms of population.
Beautiful area, actually. I've been to St. Pete. It's a beautiful place.
Oh, it's the best. But I remember at this time, it was different now, but townhomes here were selling for about $800,000. The ones in Finley Creek and so on, 800K, 805. I remember getting an appraisal, 805 for a townhome.
I mean, it just passed right through. The appraisal went through like no problem.
No problem. I was like, we have comparables to support it, so it was happening. Yeah. And I remember seeing, back then, you could have gotten a single family home with a pool, 10 minutes to the beach, for $350 to $400K. I remember seeing a 5,000 square foot home with 2 kitchens, an outdoor kitchen, a pool, gated community, Olympic swimming, you name it. I mean, high-end finishes, a theater in it, 5,000 square feet. It was selling for like $752 at that time, and I thought, what a difference! What a difference!
Yeah, $752 American.
American, yeah. But you're in U.S. currency too, so but just a big difference.
No, for sure. I mean, like even if you think about something, we could go all day long about what's available in the States, and I mean their states vary from state to state, but it's a different world out there. So we'll see what happens with that. One thing that's on my mind is what made you get into the mortgage business? What made you move into that industry?
Yeah, so I actually got licensed in 2014, so way back. So I always knew I wanted to do this, but I never really got into it until 2019. So I was a finance manager at Chrysler, so I had an understanding of lending, credit, relationships with lenders and clients, and I always wanted to own my own business. And so, and I like real estate. So I remember one time I was actually working at Chrysler, it was 2019, and I was on vacation. I was actually in Bosnia, and I was so I'm in the Airbnb. I'm looking over at the city. I'm having a coffee, and I remember I closed a mortgage deal from the living room, and I thought this was before work from home was a thing. Yeah. And I thought, wow, I just did this, and I'm in Bosnia. I came back to Chrysler. They're there for 7 years, and I gave my 2 weeks notice. And everybody thought I was crazy. You're leaving this a really high-paying job that gives you, you can drive a free car, and they're nice cars, and so on. But I thought, no, I want this, right? I want my own business, and so I'm thankful for it. I've enjoyed every step of the way, and I can't see myself doing anything else right now.
Awesome. And then one last thing I wanted to talk about here was what's your favorite part about being a mortgage broker? Obviously, that was the flexibility is one thing, but what's your favorite part about being a mortgage broker?
Yeah, I mean, I've met some really amazing people and clients. Like I have clients in Bahrain, I have clients in parts of Africa, I have clients, all sorts of, like different sort of clientele with different sort of finances. It's really interesting to me as somebody who likes this thing, to sort of, to see how everybody operates. I've helped a lot of people. Like I've really, with refinancing, we've gotten people out of debt. We've helped them pay for a major life event like a wedding. I've helped people build an incredible amount of wealth through different investment properties and properties for themselves, both the average person and the investors. I've had relationships with these lenders where they've introduced niche products that I'm like, you know what, this is a good fit for my client. Like this could work for, you know what I mean? You have these aha moments like, yes, I know somebody who could be, this could be of use to. So I love that. Like we have so many financial instruments to help you get to your financial goals. And I love sort of just applying them. And, really.
Yeah, I think there's a thing to be said about having client success. Like that's just like for me, that's a huge thing for me as well, is finding, we're looking for townhomes. Yeah, we're looking for single homes in Barrhaven or Canada, but it's like finding that perfect one, and you see the people's eyes light up. I'm sure they do the same thing, right? Like when you feel the excitement that they get because it fits perfectly for what they're looking for. That's one of those things that I'm really happy about. I'm sure you are too.
Yeah, for sure. And let's talk about this townhome.
Yeah.
Let's talk about these townhomes. Listen, townhomes are great. Like if we're talking about just financial things. So I'll give you a little townhouse story. I had a client, he bought a townhouse and he always wanted to open up a business. He bought it at a good price. The townhouse appraised in value. We took out equity. He invested money, and he was somebody that was making, I'd say 50, 60,000. He took that money, he invested it into a business, and that business right now is very successful. It's actually in Ottawa, but it's very successful. And this is just somebody that bought a townhome. So yes, it's home. A townhouse is shelter. It's your home. It's beautiful. You're going to raise your family in it. But it's also part of your financial plan. Yeah. It's going to lead to your financial success. And there's so much versatility with mortgages and property that it's get yourself a townhome.
Yeah.
Or get a condo, get something, get into the market. Like really.
It's the flexibility. Like when I bought my first home, that was the first thing that I saw is, again, I'm not telling anybody to go out there and buy their home today. It's more that you realize there is some flexibility with the finances, and you can do certain things that you wouldn't be able to do if you're just renting and just that's it.
Yeah.
But no, and I think having a good mortgage broker and a good realtor are two things that are pretty valuable. Especially if you have these long-term plans. Like I work with clients that are looking, from now up until the next 5 years, and we have to figure things out how we're going to get to these goals. And I'm sure you're in the same boat where, they're not going to be doing everything today, but over the next 5 years, we got to do this, this, and this, and we have to have a structure on how we're going to get there. So
yeah, absolutely.
So with that, how can people reach you and get their success started?
Yeah, so Instagram, 613 Mortgage Broker. You can follow me there.
Awesome.
The website, safmortgage.com. So my full contact details are there. Google, search my name. You'll find the business address. I'm always available. We have a team, so we have underwriters, we have fulfillment. So somebody's always there to answer the phone, to help you out and get you on your way to home ownership.
Awesome. And just so everybody knows, they do have a really good office. It's in Britannia. Like, where is it? Right in Britannia?
Yeah, right in Britannia. Right by the coffee shop, ice cream shop.
Yeah, the ice cream shop is fantastic. I never tried it. I swear to God, I never tried it, but give it a shot. So yeah, I'll thank you everybody for listening, and we'll see you next time.
Bye. Thank you.